Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 3rd of June. I'm Daniel Lam, your host for the podcast. Yesterday, we spoke about euro area equities and why we're neutral on them. Now, one of the main arguments vis-a-vis US equities is ECB's hawkish path, which the market priced in earlier than they priced into the Fed for US equities, which led to relatively solid performance in euro area equities in the earlier part of May. Now, what about the bond markets? We believe European bonds may offer more interesting prospects than US bonds. Recent euro area consumer inflation data points to a stagflationary impulse, though not yet a full stagflation regime. The sharp April energy price rise, driven by Hormuz Strait closure, reflects an external supply shock rather than broad-based domestic inflation, as core inflation eased to 2.2%. Meanwhile, growth momentum has weakened materially. The first quarter GDP rose just 0.1% Q-on-Q, and the European Commission has cut its 2026 forecast. This mix of softer growth and energy-driven inflation leaves the ECB in a tough position, but does not yet signal entrenched wage price dynamics. Now, we believe there's limited upside in bond yields in the euro area. Markets have already priced in a fairly hawkish ECB path, including a 25 basis point hike as early as June and another by the third quarter of 2026 to year end. The hurdle for a further meaningful spike in bond yields is therefore relatively high, unless the ECB delivers a distinctly hawkish message via forward guidance or balance sheet policies. Moreover, a June hike alone is unlikely to be able to drive sustained currency upside if already discounted. Also, euro-denominated credit spreads could widen in a weakening growth environment, so we prefer high-quality defensive credit exposure to weather recessionary impulse, particularly the European financials, given their solid fundamentals. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.